can't see a thing without my glasses on.
We've got some special guests tuning in from the US and Australia today. I'm very delighted that they are joining us in this conversation because this month, it's March, we are celebrating a Women's Month. And of course, it kicked off with the International Women's Day. And throughout March, we've been rolling out content just catered to women's financial habits and how exactly do they use their money, and also how do they invest it, because that is the question, right? What are these personal investment stories of women out there all over the world? And so that's why today's topic is important, because we're covering women investing and their stories behind it. Now, before we go on, I need to remind you that you need to use this webinar, this live show, as always, for educational purposes, because we're here to guide you with your personal investment journey. And so wherever you're tuning in from, whether it's Australia, US, Singapore, or the rest of the world, remember that you're using this as an educational tool. So network in the community comment section. And towards the end, I would like to encourage you to ask as many questions as you can to our guests for today. And so I'm so excited to introduce two women onto our show today from the US and from Australia. We have Amy and Sarah. Hi, ladies.
Hi.
Hi, how are you?
I'm good. I mean, I'm in Singapore, you're in Delaware, and we're also in Sydney, right? So Amy and
Yes,
Sarah,
I'm in
tell me
Sydney. Yeah.
about yourselves, and what do you plan to achieve on this show? Because we're connecting with the other women out there.
To me first.
Yes, of course.
Okay. Well, I am Amy Nick. Everybody knows me as Amy Nick on Moomoo. I am from Delaware, United States. I am a mother of two, real estate agent specializing in land and farm sales. I started investing during the COVID lockdown out of boredom and fell in love with it. And what I'd like to achieve with this is maybe bringing uh, awareness maybe to how you really should look at investing, um, and to sway away maybe from the hype and things like that, and to that you need to have a plan.
Absolutely. And, it's about the experience that you accumulate as well, right? Based on why you do it and what keeps you going. So,
Yes.
Sarah, what about yourself?
Um, I've just turned 42 2 days ago. I
Okay.
have,
Happy
yeah,
birthday.
thank you. Have four girls,
Okay.
and I think what I want to achieve out of this is I need them to know that they can take charge, and the earlier the better,
Mm,
and I think that goes for everybody, not just women, but yeah, I think the girls in particular sort of
mhm,
need to understand that they can control their own finances.
mhm, mhm.
And in Australia, it's very male dominated, so it's very nice to see Mumu down here and getting it out there as well. Yeah, so
I know you're right in saying that, because I was so excited when when they told me we had two women coming on the show and they're going to share their personal investment journeys. And so I think this is the start of the conversation that we can have to empower women, and also people who are not women and don't identify as one, to also be a part of starting investing already, because it's for everyone. Now, I want to start off with, that primary motivation. Like, how did you start investing? Perhaps Amy, we can start with you.
Well, I started investing during the COVID lockdown because I was bored and I saw that I could actually make some real money doing it. Of course, it came with losses at first, but I was determined to master it. I said, I need to learn everything that I can about this because I will do this and I will be successful.
Right. Wow. I love that determination. Now, Sarah, what about yourself?
I also started during COVID as well. Partly boredom and also more time to just sort of look into my own finances and things like that, because the statistics, they're not fantastic for us, but I think we're getting there. It's all, it's getting a bit more equal now, which I like to see. But yeah, no, I think it's not just for women. I think everybody during COVID had a chance to sort of reassess where they're at financially. There's no real sort of oh, there's no sort of rules, I guess, especially now where you can sort of take charge and do your own thing. So yeah.
I mean, you brought up taking charge and really being in control of your life and your finances. And I think that's an important point, because during COVID, because both of you brought up this COVID point, a lot of people had that extra time at home to garner all these new skills. And I think the younger generation as well, the younger investors out there, they started feeling like they want to get financial freedom earlier. What do you think, your own kids are looking at as a motivation to even follow suit in your investment journey?
I think the biggest lesson they've learned from me is start early, because I didn't. And that is one of my biggest regrets. I think during COVID, like you said, it gives times to learn some more skills and look into it. So I did a lot of the little courses and things like that on Move First, did a lot of learning before I started investing. Began in crypto, didn't do so great, moved to stocks, and I really like that. So that's where I'm sticking to. And I'm teaching my kids as well. I get them very involved in,
That's great. So do you start with the learning tools first? Do you learn it together first and then go from there?
Learning the paper trading and things like that, just to sort of get used to the process, I guess. And then it also teaches to pay attention to my own habits, like the emotional trading and things like that. We all fall into those sort of habits. So that was another key sort of learning point, and I'm trying to teach them the same thing. So don't get attached. I have been attached to stocks, and it doesn't, sometimes it works, sometimes it doesn't. But I try and teach them to look at the fundamentals first, and then see what's going on. So I should have took their advice. I should have took their advice. I think it was about 6 months ago. Oh, Mum, we're having great updates in Roblox and things like that. And I put it in my paper folio just for them, and it's up 300%. I'm like, why didn't I listen to them? So I think they kind of understand as well. They see what's trending and what's sort of happening, especially when it comes to all the tech as well. They're very much into that. So
that's just an example, right? I mean, that is just a part of the larger trends of things, but also the paying attention to analysis and macro trends in the markets, when the experts are giving their insights. I think that's also really important. So thank you for highlighting that. Amy, you know, really, what is your thought on that discipline side of investing? How do you motivate your own children or the younger people around you, and also keep yourself on that journey?
Well, my children are still a little young. I started later in life. So my son just turned 6. He doesn't really care about investing. My daughter is 12, and she's not investing, but she knows about saving, and we reward her with money. So when she gets good grades and things, she gets money in her savings account, and she's a saver. I'm very proud of her for that. So we've started her that way, learning money management, and then it will graduate to, stocks and things. As far as myself, for discipline, that's probably the hardest thing to learn with investing, and it is a everyday struggle. We all get the FOMO. We all,
Right.
have to take a step back, and you have to sit on your hands sometimes. It's hard, but you have to have your plan and stick to the plan and not sway from it and just be robotic.
And so this term being robotic, I mean, I guess it alludes to, removing that sort of emotion sometimes with investing, right? Or sort of just being swayed by your own shortcomings. Sometimes you can't help it, right? So what are the mechanisms that you have in your life? Like, for example, I know someone that has a timer on the phone, or has a set time where they need to stop using the the trading side, and go to bed and then wake up and start again. We got all kinds of personalities, but would you share some of your own personal stories behind this?
Well, for me, one of the things I do if I'm having a bad trading day, and we all have them where things just are not going your way, I walk away. I'm done for the day. Forget it. Everything I touch is just turning bad. It's time to stop, because your first instinct is, I need to get my money back. I need to get back what I just lost. That's the wrong thing to do. You're just going to lose more. Walk away and just don't look back until the next day. Get yourself right, meditate, do what you got to do, and come back fresh. The next day is a new day, and have those positive vibes.
Right. Well, that's a really important point, Amy, because a lot of people struggle with that, right? Because like what Sarah mentioned as well, is being tied to that stock, tied to the money. And so the other experts that I've had on the show before, they've quoted, and I quote them as well, you should be willing to, whatever you put in, you should be willing to lose it. You should be ready to lose that. What do you think of that thought?
That's exactly true. You have to be, even though you're willing to lose it, we all hate to lose. Yeah, so you want to get that back. But yes, you should never need the money. It's there for growth, to better yourself, but you shouldn't be playing the stock market because you need to pay your bills. That's gambling. This isn't gambling.
Yep.
Very important point. Now, Sarah, do you have anything to add to that?
Oh, no, I totally agree. It isn't gambling. Yeah, it's a very different thing. And like you said, when you're tied to the stock, it's very hard to walk away sometimes, because we want to dollar cost average and bring that down. But if it's on a downtrend and it continues that way, like Amy said, you just got to walk away sometimes and go, okay, reassess tomorrow, and catch up that way. But there was another point she brought up, which was with her daughter. She's 12, and teaching savings, and I think that's one thing we're very good at, especially as women. We're good at saving and things like that. So teaching the kids to not so much invest, but to save early. And I think that's not just the kids, that's everybody. Like, I couldn't have started without a little bit of savings, clearing debt. Like Amy just said, you shouldn't need to be trading to pay the bills. That's sort of put aside for the growth.
Right.
So, yeah.
And you built your portfolio from there. Thank you for sharing all that.
Okay.
Getting questions already from the audience. So, as always, we treat this as a two-way conversation. To everyone who just tuned in, to our audience, thank you for being with us. You're here with me, and I've got two women from the US and Australia tuned in, Amy and Sarah. And so keep asking your questions for them, and we will pick the best questions to ask at the end of the show. Okay. My next question for you ladies is, we mentioned all those ways to deal with, perhaps obstacles or challenges daily. Would you be keen to share a little bit more about certain challenges or other challenges that you find yourself facing during these market times?
Oh, the challenges. Oh, go ahead. You go.
No, you're fine. Go.
Maybe.
Well, one of the challenges is finding, obviously, it's not the best time for growth, investing long term. So I've done a lot of day trading, and the challenge is finding those good setups, and changing my strategy and adapting to the market, because you have to evolve with the market and kind of change yourself and your mindset to follow what the market is doing. And it's changing all the time, it seems like. So that's been a challenge, but you find your groove and you get there, and then it changes again.
Of course.
Yeah. No, that's exactly right. I started similar. I was all for the long-term investing and just letting it sit there. But like you mentioned, given the market and the way it has been, I've had to change strategy as well. A lot of short, mid-term trades, bit of day trading. You've got to follow the swings now. But I think now that a lot of things have hit bottom, now might be the time to start getting back into sort of maybe not the growth, but the blue chips and things like that are going to stick around, and that will grow. I know they've gone down as well, but like I said, a lot of hit bottom. So I think that might be time to get back in. Yeah. But in the meantime, just like even Amy said, just changing strategy, reviewing it every day. Like you can't start out with one mindset, because like you said, the market changes all the time. So you do have to change strategy and review the portfolio all the time, see what's on there, see what the risk tolerance is and the time horizon as well for what you're investing in. And that's changed for me as well. So I had a lot of long-term horizons, and they've sort of come down a little bit, but yeah, we'll see what happens this year in the market. Yeah.
The mixed approach. Now, you mentioned before, Amy, as well, about the environment, the volatility factor, right? So, of course, I'm going to bring up the rising rates environment. And you both are coming from the US and Australia, and here I am in Singapore. What are the, specific challenges related to perhaps inflation that you've managed to, I guess, navigate amongst yourselves with investing?
Quite a few of my stocks were growth stocks, and they were dependent on some loans and things like that. So once inflation and the interest rate hikes we had 10 consecutive rates hikes in a row. So so I had to reassess the stocks I had in my portfolio that had a lot of debt ratio as well. So given the interest and things like that, I had to reassess those. And so you've really got to check what stocks you have and what the fundamentals behind them are, sort of thing. When it comes to the debt and things like that, once interest rates go through the roof, well, their value goes down. So yeah, like I said, back to blue chips maybe.
So always adapting, like you said. And what about yourself, Amy?
Well, I started getting into options so I can make money going up or down.
Okay.
So that's, so we can do the blue chips. We can do the blue chips if it's a bad market or a good market. We're making money both ways.
Mm.
So I'm curious to know, what was that point? What was that turning point for you with the market situation? I mean, of course, coming from different countries, like when you face your own specific challenges, what was that turning point for you to say, okay, now is the time to review, or are you just constantly reviewing?
For me, the reason why I started playing options was because someone in the Discord that I belonged to kept harping on me saying, "Amy, you need to do this. You would be." Oh my goodness! He kept saying, "Oh, you need to do this. You would be great at this." And I finally took the leap, and I saw how much money I can make, and I was like, "Oh, this is insane! I'm addicted. Let's do this every day."
Right, you tried it out and you worked out it's for you, and so you stick to it, right? And I guess
Yes,
that
I play low caps and mid caps and the blue chips, but yeah, I go back and forth. It depends on how I keep an eye on SPY. So what SPY's doing, it kind of determines which way I'm going to go that day. Because I set an amount. I never trade my full portfolio. Never, ever, ever. Um, I set aside a certain amount that I know I'm going to trade, and I stick to it. And sometimes I split it up and say, okay, I'm going to play some pennies today with this amount. This amount I'm going to put in to options, and then I'm going to have 30% set aside as I call it my save my behind money in case I need to throw down on something just to get me out of it. But yeah, so I go day by day. I don't try to have a crystal ball and predict what the market's going to do any given day. I wake up in the morning, I sit back, take a look, see what the charts look like, and then I decide. But I have a plan for each way I'm going to go.
I see. Okay. So how long did it take for you to create that comprehensive plan for yourself? Because I know there are a lot of intermediate or advanced investors that, still struggle with trying to figure out where to go when something unexpected happens.
How long did it take me to come up with a plan? Oh, it's evolving all the time. But to come up with a way to know how to plan probably took a couple years. I mean, it takes time to understand and know. You need to know how to read the charts. That's number one. I don't know how anyone could be successful at trading without knowing how to read the charts. You have to learn the charts, and it takes a lot of screen time.
Of course.
You have to put in, you get what you put into it.
Yes. As always, with a lot of things and tasks in life, right? Thank you for sharing that. Now, Sarah, anything to add to what Amy just shared?
One of the key points she said is that taking time, it takes years. You can't, and when you ask her what is your plan, I'm the same. It's constantly evolving. You start with one plan and then markets change. You have to evolve. You've got to reassess things like that. Options, I'm still learning. I've been trading in stocks, ETFs, and CFDs for a little bit. So options, I'm still, I think the tables are hard for me to figure out, to wrap my head around. So, but there's a lot of information on there that will help sort of decipher that, and that's what I'm been doing at the moment, because that's one of the things that I should be looking at right now. Like Amy said, things change day by day, and you've got to be able to go up or down, making money either way. So that's something that I'm learning now. But no, just starting in the stocks and things like that, I think was key to learning slowly as well. Yeah, it does take years. You can't have a plan overnight. Yeah.
Thank you. So back to the topic of today, women investing and your stories behind it. Now, for the people who just joined us, we're having two guests here, and we want you to ask as many questions as you can, because I've already picked out some of my questions that I want to ask them at the end. So keep them coming, okay? So Amy and Sarah, for the next question, I guess I want to tie it back to the two key words in the topic for today, and that's women and investing. And so, what are, in your opinion, what is that one, I guess, specific female investors challenge you think that is very specific to that group, that they typically face from your own experience?
Knowledge. I think we didn't have access to a lot of the knowledge, and the online platforms just changing. They've changed the face of investing for women, I think, as well. It's more accessible. We don't. I'm not alone. I felt very alone for a little while there. So, yeah. But to start, I think it was just looking at statistics, really. I mean, the Australian statistics aren't fantastic. I'd have to recheck, but my last look, I think it was 1 in 4 women and 23% have no super when they retire, which I believe is a 401k in the US. Yes. Yeah. So many women here don't even have it. We've raising kids and doing flexible jobs that don't contribute to superannuation, things like that. Or we start working later in life after raising the kids, which means we've lost 20 years of compounding interest as well on superannuation or savings or anything like that. So that's the other thing, teaching the kids to start early, and not be one of those statistics, I think, which is good. My 2 oldest are very good at that. They're very good at that. Yeah, I just think, was it the Association of Super Funds of Australia? So the average super balance needed to be comfortable is, in Australia, on average, 545k. So men in the same, like women 60 to 64 with a median average of 122k, and men in the same bracket 154. So a little bit more, but both are falling very short of the standard.
Right.
Yeah. So I think we all need to pay attention to that, and the women need to start, younger women need to start understanding the compounding and starting early. And I think here too, during COVID, we all had a bit of a setback. We had access to super and we could take some out and things like that. And that was great at the time, but now we've lost a huge chunk, and that's losing compounding interest as well. And so it's just, yeah, it wasn't great in COVID, but it gave me time to look at everything and look at the statistics, and that's what sort of woke me up to it, and prompted the conversation with my kids, like, you've got to start early. Yeah. And I'd say the same if I had boys, to be honest, just for the younger generations. I think that goes for either way. Yeah. But the girls, I think we need to know that. And Amy's a great example with a great career and kids, and she's just doing it all. So kudos to you, Amy. I admire that very much.
It's great. I'm so glad that you're here, both of you, to share your stories about this and also inspire the other women in the Moo community. So what you highlighted was the access to knowledge and being able to at least have the tools now to start, no matter what age you are. So Amy, from my community experience over here, a lot of the women do highlight confidence being an issue compared to their other male counterparts. So what do you think about that, Amy?
As far as myself, um, maybe when I first started, but I don't think I ever really lacked confidence in my abilities, maybe confidence in not knowing how. And that's where the determination to learn came from. I don't know. So now I need to know so that I am confident in going into trades and uh, going from there. But really has nothing to do with being a female or anything like that. But in the US, it's not so much, we don't have the same challenges, fortunately, as other parts of the world as far as females. Yes, there are some people that are still back in 1952 and feel that women should be at home and that we're stupid and but that's on them. I feel sorry for them that they think that way because it's not forward thinking and we're here to stay.
Of course. I think things are they've already changed and they continue to change. And I think it's a great thing that we are progressing. And at least we're having now these communities for investments, right? So that we don't feel alone at the end of the day, no matter whether you're a woman or a man or if you identify as something else. So I think it's really important today that we not just cover that spectrum of things, but we also cover how we can strategize, right? So I would like to move the conversation to strategy. And really going into your own personal ways of investing. Now, Amy, you mentioned you have delved into options now. And
yes.
Sarah, of course, you prefer just the stocks and also learning more about options. What about the other instruments? What do you have right now in your portfolio personally?
What do I have in my portfolio? Right now, I don't have any option plays in my portfolio. I only have small caps right now, but I tend to close out as much as I can before the day ends, just so that I'm not stuck. Unless I have a really good swing. I have been finding some good swings that I'll swing for a week or so, but the trick is getting in super, super, super early and being okay with seeing red at first. See the red before the green. But right now I only have a couple stocks in there that I'm holding and I plan to close those probably tomorrow. But I'll open something else up.
Okay. Thank you for sharing. What about Sarah?
Long term at the moment, I do have Futu. That's one of my main ones that I will stick with. I do a little swing on that now and then if there's a nice, like Amy said, you follow the chart. Some things you just want to close that day. But that's one thing I've been holding on to. I do have, sorry, I'm just looking at it. I have to be reminded.
Yeah,
I've got a few.
Right? It's mainly stocks, you would say?
Yes. Yeah. So
Okay.
mining and things like that, that's my main sort of interest. A little bit of biopharma. Yeah, I think I don't know if I can mention specifically, but Novonix and Liontown, because they're like growth stocks in the mining. Yeah, being in the Australian industry, I see them grow, and there's so many of them, and they're all merging and combining, and so you've really got to keep up to date with the news as well to sort of see what's going on there. But there is a few like Amy that I'll just you close at the end of the day, like something you need to sleep comfortably as well. Yeah, I don't mind a smaller profit if it means, I don't have to watch it overnight because of my time zone. So I 10 till 4 for my market, and then midnight or pre-market starts about 9, 10 o'clock here at night. And then I do a little bit of checking on what's there. I have some, small cap biofarm, things like that, and food shoe, a couple of other ones that I sort of need to check before I go, set the trade, set any stop losses if I need to, that sort of thing. Yeah. So I hold a bit of a variety, actually. Yeah. Yeah.
Very diverse. So
yeah,
you try to implement a lot of different elements for diversification.
Yeah. Oh, absolutely. I've got the small caps, I've got some blue chips, things like that. But diversification was, I was always told diversify, diversify, diversify. And I ended up having, they say don't put all your eggs in one basket, but I ended up having too many baskets.
I see.
If you know what, do you know what I mean? Like I spread myself way too thin.
Mindedness, like a focus at least.
Yeah, there was just too many.
Yeah. I did that too at first.
Narrowed it down to sort of the ones the ones I like. But in the beginning, I didn't mind having quite a few there and learning on the charts and things like that. The short-term, long-term technical analysis on the charts, things like that. So just small positions, but they were kind of like practice positions as well. Just sort of gauging my own my own risk tolerance and that sort of thing. Seeing what I'm willing to lose, and like Amy said earlier, you just don't put in what you can't afford to lose overnight. So I try and stick to that as well.
Talking about risk, are you both risk takers?
Oh yes. Sometimes I have to say, simmer down, simmer down.
Yeah, you love your options.
Well, other stuff too. I look at it and I just think, oh, this thing's going to do something. I just go for it. Where some people would say that's FOMO. It's not really FOMO. It's just, I already know just with a glance, I need to do this now. And
you're good at charts. You're very good at reading chart. You're good at reading the chart. So I think you're good at picking up those plays as well.
Well, and it comes with watching. When you watch the same stocks all the time, you get to know their personality too, because the stocks, they do have personalities.
Yep.
And well, I can't bring up specific stocks, but there was one today that I absolutely hate. It's one that we were talking about last night. I cannot stand the stock, but I looked at it today and I said, oh, this thing's about to go. And I threw money in there. And next thing you know, there it is. It's going. It's one of my swings tonight.
Okay.
But it's a super, super risky play where I'm like, why did I do that? Why did I do that?
I think I know the one you're talking about.
Yeah. So, I mean, that's an interesting story because I think it happens pretty often, right?
Yeah.
But thank you for sharing your risk appetite. I mean, I started off as a risk taker, very, very risk taking. And then over time, with mistakes made, I started to become a little more risk adverse. However, it's still in me, right? And sometimes it really depends on the context. So it's hard to say, like you mentioned. Okay, so with that, I mean, before we go into the last questions, before we go into live Q&A, what would you say, based on your mistakes in the past, what would you say investors should avoid in their personal investing journeys, and how can they move forward from that?
Mm. I think one of the biggest mistakes people make can be following the meme stocks and things like, and sure, you can make money off that, but that's very short term. And I try to avoid those where I can. I used to be very a little bit more, I liked a bit more risk as well. That I started in crypto, so that was, yeah. But the volatility in that, and I didn't understand enough, and I had to really come to that conclusion that if I don't understand it, I shouldn't be putting money into it. So I think even though I do like a few risky little plays here and there, just mostly with our mining stocks, because they're very small cap and they can just fly or die overnight. They're those sort of things. But I think with the strategy is you've got to have a combination. I think, yeah. Right. So start a little bit risky, and then, as you said, get a little bit more sort of risk averse, and just get a bit more used to it. And like Amy said, they have personality as well. Yeah. So once you narrow it down and you narrow it down to the ones that you really want to watch, it's much easier to understand. Yeah. I think that's a big thing, is understanding it before you put the money in.
Very crucial. Thank you for sharing that for our audience. What about you, Amy?
Well, for the new traders, the beginners, the first thing is don't believe the hype. Don't buy something because someone said buy this. Do your TA, do your DD, make sure you have a plan, and buy something because you want to buy it and you think it's a good buy, not because this guy over here is saying buy this, it's going to the moon. Because guess what? It's most likely not going to the moon.
And it's probably because they've invested in it and they want you to. Yes.
Yes. Don't believe the people that say it's going to do this by this time, or because nobody knows what the market's going to do. Warren Buffett doesn't know what the market's going to do. If Warren Buffett doesn't know, this guy over here doesn't know either.
Exactly. Yeah, exactly. The market the market beats the best of them. So, I think you've just got to sort of do your due diligence and just understand that there will be losses, there will be mistakes. But my personal motto is win or learn, but don't lose. So even if you lose money, as long as you're learning from it, I think it's not a total loss. You can take something away from it and implement something different next time. Take a different strategy. Yeah.
Absolutely. Like riding the wave. It's kind of an analogy for life too, and being able to accept your mistakes. The class we had a Forex masterclass here in Singapore on Monday, and the guest speaker said the earlier you can accept that you're wrong, the better. Sometimes you are just wrong.
Yes.
Amy, did you have something to add?
Yep.
I'm sorry?
Do you have something to add previously?
Oh, yes. Well, as far as the losses are concerned, a good way to learn from the losses is to go back and look at the charts and at the different time frames and see what they look like, see where you went wrong, what it was doing. So you know for the next time, this is what it looks like when it's bad and I need to get out. That's one of the ways that I learned how the charts move was I went back and I looked at my mistakes and I said, okay, well, the next time I see this setup, I know I need to get out of there. But I do the same thing with I don't anymore, but I did the same thing with the wins that I would go back and look at the charts and say, okay, so this is what it looks like when it's getting ready to take off. This is something that I need to look for in other charts. And I would go and I would compare and go back and forth. And it was just hours of doing that. hours
Right.
and being obsessed with it.
Yeah, yeah. Amy, do you when you go back and look at your previous mistakes or plays that you want to make, do you only look at your short-term technical analysis, or do you go back to your weekly charts, daily, monthly,
No,
hourly?
no, not for the ones that were losses, because for me, I wanted to know at what point should I have gotten out.
Mm-hmm.
So
Right.
I was looking at more like the 5 minute chart and things and going back to where did it start to turn bad? And I
Mm-hmm.
should have gotten out. And that's another hard thing to learn too, is when to get in and when to get out. And even now, it takes discipline with myself to cut it loose. Green, not greed. Get
Mm-hmm.
out of there. Take the profit and go.
Yeah.
And look forward, right? At the end of the
Yes,
day. Mm.
yes.
So we're getting a lot of questions on this, especially what we just discussed. So let's round up this discussion that we're having with the question about, because both of you are coming from the Moo communities and you've developed this own community of your own. So I'm really curious to know, how has that benefited your own investment journey, and also the audiences that you deal with in your communities?
Oh, the Moo community is great. I've met a lot of really great people that we can talk stocks with, because truthfully, I've got a couple of friends that I can talk stocks with. But other than that, no, it's the Moo community that they are there and we can chat privately about stuff and compare and bounce ideas off of each other and keep an eye out and bring attention to other plays and stuff. So it's really a group effort. And I think
Yeah.
it's great. We're learning from each other. I mean, I'm learning from other people in the community every day. I'm like, oh, that's great. I didn't realize that. I mean, and I love it.
I'm
Right.
in the same boat. I've got just a couple of friends that are into the markets or know a little bit about it, but other than that, no. It's the Moo community that, and you need to be able to bounce ideas, and like you said, you've got to accept when you're wrong as well. So bouncing ideas, and it's like learning in a classroom, do you know, versus just learning online. Whereas you get to talk to people, bounce ideas, different strategies, what works for some people, different suggestions, things like that. I don't get that in real life. I don't have
Mm-hmm.
enough friends that are, into it. So it's definitely the Mew community that's brought me into it, and that's this. Yeah, I've fallen in love with it now. It is addictive.
Of course, because you also develop that habit and discipline, right? That becomes a part of your life already, to keep growing your wealth at the end of the day. And so I think it's important now to say that, these investments are based on what we discussed, is really based on your experience and going through the years and the motions of it. And so really, thank you so much, Sarah and Amy, for offering such valuable advice for a lot of the young women tune in today, those who have already begun their investment journey. And it's so important from the perspective of an experienced female investor like yourself to come on these shows, to share your knowledge, and to really offer the possibilities that people can have when people invest. Something that I believe is not being picked up enough in schools at the moment. So I think this financial literacy component can be improved. And so I think over time, I hope more young people, young female investors, and just in general, people come online and use such tools and communities like your own to learn more from each other. Yeah. So thank you so much for that. Now I would love to pick out some of the questions. We got so many right here. So
I
we just
know, I've seen a
go
few.
straight into it, and I'm going to open it to the floor. All right. And I know as well that to the audience, you might not know this, but Amy and Sarah picked their own questions too. So they have sent it to me and I will ask as well. So I would like to just start off with the first question. Now, Amy and Sarah, what would you say is the advantage of being a female investor?
Sarah, you can have that one.
Oh, the advantage. Oh, okay. Oh, I think it's because we've got different strategies. We've not to be too generalistic, but I think women have a lot of skills just built around home life as well, time management and risk management and things. Oh, where do I go with that? Yeah, I don't know. I think those extra sort of skills will come into play as well. Yeah. Oh,
Mhm.
I don't know.
I
Yeah.
suppose the whatever you mentioned before about specific commitments that maybe is just female related, right?
Yeah.
There are challenges that we personally face as women that men don't have, and this
Yeah.
is
Yeah.
unique.
That's right. Yeah. The
Perhaps
children, the juggling, the time, things like that. Yeah. Yeah.
like multitasking and everything, which everyone can do anyway. But I think the unique challenges can be switched over into an opportunity as well.
Yes.
Right?
Yes. No,
Mhm.
that's right. Yeah.
Thank you. Okay, next question. I'll open it to the floor as well. So, can we talk about the three top things that you would like every young woman in this show right now to know about investing?
Want to learn
Mhm.
would be the first thing.
Mhm.
Second thing is patience. You need a lot of patience. Yeah, accepting when you're wrong, learning when you're right, just practicing, I think. So the willingness to learn and having the patience as well would be one of the big things. Um, and just not following the hype. Just grow the way you want to grow. Like try and have a plan. We do have to alter plans and things like that, but try and have a plan and stick to that. Yeah.
Mhm. Right. Thank you. Amy, do you have anything to add to that?
Well, and to just know that you will have losses and don't lose the determination to do it. Don't be try not to be overwhelmed. Take it one step at a time. Um, because you can do it. You just have to, like Sarah said, have that willingness to learn and yeah, don't let yourself get down over the losses because the losses are actually a win because you can learn from them.
Mhm.
They make us stronger.
Yeah.
Right. Very, very
Win or
good.
learn, don't lose.
Right. So the next question is about, I guess, your strategy. So could you tell me, Amy, I mean, of course, Sarah can answer as well. What is the best advice you have for a novice investor?
The best advice for a novice investor, take it slow, study the charts. Some people like to just dive in like I did, but get your feet wet with it and watch the charts. And like you said, don't invest any more than what you're willing to lose because more than likely, a novice, you're going to lose it. You may not lose it all, but you're going to have losses. I mean, it's just, you can't get around it. It's going to happen. Um, but yeah, just take it slow and soak up all the knowledge you can, um, and go from there.
Mhm. Great. Thank you. Sarah, do you have anything to add to that?
Oh, I totally agree. I
Yeah.
think just take it slow, learn, absorb everything you can. Following the institutions and where the big money's going, that's another thing. Just and like I said, get your feet wet, but don't invest more than you can lose, and just take it slow. There's no rush. I mean, we'd all like to get rich quick, but that's not going to happen. So, yeah, no, take it slow. You've really got to want to learn, I think. If you're not committed to learning and, like Amy said, watching the charts and even reviewing mistakes and things like that, you need to be willing to do that. And I think it's, it's easy for retail investors to, what is it, 67%, I think, will lose. And I think that's just down to not wanting to spend the time learning. They want to jump straight in and follow the hype and things like that. But yeah, I think the other, 33%, I think, would be the ones that are smart and are learning and taking it slow and, yeah. Doing it the right way.
I think statistically it's what 3 out of every 10 trades are actually wins, all the rest are losses, which that blew my mind when I read that. I can't remember if that was Forbes or somewhere else, but I was like, are you serious? So if you're doing better than 3 out of 10, you're doing great. You're doing better than average.
Yeah. No, well, those numbers fit in exactly right with the 67% that lose. And I think that's down to just not taking it slow.
Absolutely. Thank you for that. Next question. From the both of you, what have you learned from any mishap investment deal? Perhaps you can share further about a story.
Ooh. Without going into specific stocks.
Yeah, we don't have to go into specifics. Keep it general, but perhaps just a major life lesson from a mishap investment deal that you've dealt with before.
Focusing on the fundamental analysis on one of my particular stocks, and they had really good fundamentals and things coming up. So I didn't pay attention so close to the short-term technical charts. And that was a mistake. I won't make that one again. Yeah. So I think, fundamentals and technical analysis need to be used together. But the way the market is, I think Amy's got a point. It's the short-term TA that will sort of, that's where you're going to learn as well. Yeah.
Great. What about you, Amy?
For me, the biggest lesson from a loss was learning that stocks don't keep going up forever. That was like lesson number 1. It's not going to keep going. It's going to drop at some point in time, and I need to sell. I can't keep holding this thing and expect it to just go on for infinity.
Yeah. Or holding something that goes into great profit and thinking it's just going to keep growing, and then watch that profit disappear. It's like, what did I do?
Just watch it go to red, and he's like, why did I sell?
Why didn't I get out? I should have got out.
And then I look back and I'm like, why? Why didn't you sell? Why did you sit there and watch it? Everybody does that.
That's analysis paralysis, where you sit there watching and go, oh, I don't know now.
Well, because you're thinking, no, it's going back up. What is it? 75% or more of trading is psychological. We have to train our brains. We have to psych ourselves out, like, the psychology of it. And I think that's the whole thing, because you're watching it in the beginning, you're gaining all this money and you're like, oh, this is great. And you're so happy. You're celebrating with, beers with your friends and everything, celebrating this stock. And then you're watching it go down and no, it's going back up. It's going back up. It's like that wishful trading on hope. and
Yes.
we can't trade on hope.
Absolutely. I think that's a key point that you've summarized for all of us today. You know, it's removing emotion and being able to be focused, disciplined, and knowing and being truthful about what's going to happen, because we don't live in an ideal world. And so it's important to keep ourselves really focused and grounded in our investments. Next question is picked out by Amy and Sarah. So I'm going to ask two questions that we got from the post previously. First question is, what are the changes in the way you invest compared to when you started investing?
For me, it's discipline and patience. Yeah, learning not to FOMO, to just, it doesn't matter that everybody else got on that train and left you behind. You have to be okay with being left behind. There's always other plays. So what's different for me is I used to hop on that train and I would lose every dime I put into it. Now I sit back and say, nope, it's okay. It's too late. I'm late to that party. I'll catch the next one. Even though it's still hard. I mean, because you want to join in the fun too, and you want to be there with everybody else, but you know,
it's the FOMO.
You can't be in everything. You can't.
Yeah.
Good points there. What about you, Sarah?
Oh, that's one of my biggest changes too, is you can't be everywhere. You've got to narrow it down, focus it, concentrate on a few that you want to understand. I believe that question was ZNWC. And he's asked me that earlier. It was, I think, like I said before, I started with the long term. I wanted to invest in solid companies or growth companies that I believed would continue to grow. Like Amy said, they don't forever. And I think that's what's had to change for me. So I've had to learn that they don't go up forever. You do need to adapt. And especially the market in the last year, it wasn't such a growth. There were good plays that were around. There were good companies that did grow, but they're coming back down now, or they're merging, or things like that. You've really got to watch the news, and that's another thing that changed, is I had to pay attention to what's going on, not just on the chart, but what's going on around as well. Yeah. So Absolutely. Going from more long term to a bit more short term, and just learning more about less companies. Yeah. I think at one point I had like 36, and it was with different positions in each 36. It was very hard to
mention. Yeah.
Holy cow.
Oh yeah. Small ones, little practicing on my technique and analysis. But if you've got actual money in it, you tend to pay more attention too. So yeah, I think yeah, going from the learning and the paper folios to sort of dipping my toes in, putting a bit of money to follow what I want to watch, and being told to diversify, and then realizing that's too much, narrow it down. And I think so. Those are the two biggest changes. Yeah, narrowing it down, not over diversification. Too many. No, you can't put all your eggs in one basket, but you can't carry 20 baskets either. So you're going to drop one eventually. So narrowing that down and changing from the longer term to a lot of the shorter terms. They would be the biggest changes. Yeah.
Amazing. Next question, picked by Amy and Sarah as well. What do you think are the key qualities for successful investors, regardless of gender?
Discipline.
Right. Yep.
And attention to detail.
So being meticulous.
Yes. Yes.
Yeah.
Because reading those SEC filings and things like that, they really help understand certain stocks, especially the ones that are going through bankruptcy, the reverse splits, things like that, the acquisitions. You need to read through that stuff to know what you're trading.
Yeah, yeah. And that's one of the best things on Moo is having access to those reports and announcements and things like that too. So I think for key qualities would be to do your due diligence. Make sure you read those reports. In the beginning, I didn't have a clue what I was reading. I had to learn how to understand what I was reading there just to begin with. But yeah, I think, like you said, patience, discipline, learning how to read those charts, learning how to read those reports and announcements, because they are the mergers, acquisitions, bankruptcies, and that comes along with the news as well. Like I've always got Bloomberg on the telly, but but yeah, I think that would be.
And also shows like this, on the app, when they tune in and get a notification that we're going live with particular analysis, doing that due diligence of tuning in when you can is learning. Yeah, it never stops.
Oh, you never stop learning. Never. I learn something new every day.
Yes,
absolutely.
Yeah. Being open to that, being open to learning and accepting.
Yeah.
Don't know everything.
Oh, nobody can know everything. That's why I like the new communities, because there's so many people that are focused on their particular little wheelhouse. So it's easy to go to certain people and say, what do you think about this or that? Or Amy's good at the charts and things like that. I've got a couple of others that I follow. Excuse me. Couple of others that I follow, and they're always posting good content. Like you said, you reviewing, watching things, and just sort of, getting involved. You've really got to pay attention. Yeah.
And take responsibility for your own learning too.
Yeah. I mean, there's some
what you don't know, right? So you have to try to, like what Amy mentioned before, when she found out that she didn't know, now she has to, right?
So yeah, I'm like that. Yeah. If I don't know something, I would, First thing I do is Google. How do I understand that? Yeah.
It's going down the rabbit hole and research it to death.
Oh my Lord. Yes. Yes. Yes, the rabbit holes are real.
Thank you so much, ladies, for sharing and for answering our community questions. We're still getting more, but I think that's all the time we have for today. So let me round up and end off with this key question. Now, ladies, whoever wants to go first, what is that final takeaway you would like to leave our audience with today?
Final takeaway. Not just the women, but anybody. Everybody has to learn. Everybody has to have the willingness to sort of look into what they don't know. Like you said, nobody can know everything. We all need to learn. And I do harp on with the girls because I have all girls. So I do believe it's important they understand as well. We are often at a disadvantage with raising kids and juggling time. So I think that's something we all need to sort of work a way around, things like that. Oh, sorry, just had a pop up there. Yeah, so I think, key takeaway, just learn. Start early, but it's never too late, and learn as much as you can. Yeah, patience.
Thank you. Patience. Thank you so much for sharing that, Sarah. What about you, Amy? What is that final takeaway for our audience?
Don't give up. Stay determined. Don't be discouraged. It takes time. It's not an overnight trading. Being successful at trading is not an overnight success. Sarah and I are still learning. We're all still learning. You know, the just stick with it and put in the time. And like I said, you get into it, you get out of it what you put into it, and just be willing to do the work. It's not easy. It's definitely not easy, and it's not a quick buck. It's actually, you know, you
It's
can
a
make learning how to
process.
trade a full-time job if you wanted to. You really could. It's involved. So just stick with it. If you really want to do it, you can do it. You just have to put in the time.
Excellent, very inspirational. Thank you so much. That was Amy and Sarah from our Moo community. Thank you so much for being on the show today. I really hope this is the start of future shows that we can connect more with the community going forward. Thank you, Amy and Sarah. See you soon.
Thank you.
Thank you.
Thank you.
See you later. Thanks so much.
Soon again. Yeah, take care.
Yes, you too. Good to see you again.
So to the audience watching, with International Women's Month coming to an end, this does not mean that women should stop investing or even just put it on hold. You have to keep going. Like Amy and Sarah mentioned, have the patience, have the discipline, and the focus to continue and to keep learning with the tools that Moomoo has for you, and also all the analysis and shows like these, because we're here to guide you. We don't want you to be alone, and we want to keep building the community. Just as Amy and Sarah mentioned, it's about doing it together as one. So remember that we want you to keep going and to start your new chapter of being financially smart and independent. So take this as a learning lesson and to keep going. And we can't wait to have more shows like this for you. So if you want to keep tabs or even leave or drop a message for further questions, still leave the comments down below, type in the chat box, and the teams will review it and get back to you if they can for your question. Okay, so keep being engaged and keep joining our live shows. You can also watch the replay of this if you missed out any points. And of course, we are looking forward to updating you on when the next live show is for the community. So thank you so much for joining us today. We had women investing and their stories behind. Look forward to the next show. Signing off, I'm Olivia Higgins.